It's Christmas party season and employers everywhere think that the Christmas staff party is a tax deduction. I really hate to be the one to have to tell you, but that's not always true, and far worse, it could attract fringe benefits tax. Let's look at how to throw a great Christmas party without being stung by the ATO. In this video, we're breaking down how exactly the ATO looks at Christmas party costs, who's covered, what's deductible, when FBT applies, and how to make sure that your celebration stays both merry and tax smart. We'll talk about the difference between holding your party at work or off-site, how the $300 rule can save you a head, and what happens when partners or clients join you. And later, I'll share a real story of one small business that turned a costly FBT mistake into a smart tax strategy. Stick around because this one could save you money and a compliance headache. Here's the thing. The tax outcome really depends on the party location, cost per head, and attendees. In the video, I'll address all of the main situations, and if you're a client, keep an eye out for our newsletter. It will be in your inbox December 1, and it will contain a complete list of every possible situation and the tax result. A Christmas party is generally just that, a party, and that's entertainment. Entertainment is generally not deductible, but worse, when provided to employees, it can attract fringe benefits tax, which is very expensive. If your party is on business premises, held during normal work hours, and only employees attend, good news, that's usually FBT exempt. So no fringe benefits tax, and while you can't claim it as a deduction or get GST credits, at least you're not hit with the FBT tax bill as well. If the party is off-site, say at a restaurant, and the cost is under $300 per head, it might qualify as a minor benefit. That means no FBT, but you still can't claim a tax deduction or GST credits. Once the cost exceeds $300 per person, the event becomes subject to FBT, but here you can usually claim a deduction and the GST credit. It's still very expensive apart from the very high cost per head. The FBT tax cost will by far outweigh the tax saving from the deduction. Let me tell you about one of our clients, Peter, a local plumbing company in Brisbane. He threw a massive Christmas dinner for his team at a riverside restaurant, about 15 employees and partners. It was $350 per head, and he thought, no worries, it's a business expense. A few months later, his accountants audited it, and the cost tipped into FBT territory. That meant an FBT bill that he didn't plan for. And the FBT was huge. For every $350 attendee, the business incurred an FBT bill of $330. But here's another client, Jenny. Jenny had a smart Christmas party. The cost per head was $110. Jenny understood that the lost tax deduction on this function meant that a $110 party effectively cost her the same as a $147 business cost because of the lost tax deduction. It was not subject to FBT, and Jenny was happy to cover the cost to reward her team for their hard work. Jenny even threw in a staff gift of under $300. It was all FBT exempt and minor benefit, and the gift was tax deductible. I have an entire video on the tax deductibility of Christmas gifts. Be sure to watch out for it. With Christmas parties, the smartest move isn't about claiming a tax deduction. It's about avoiding the nasty FBT and adjusting your spend to account for the lost tax deduction. As always, please remember that this is general advice. Your situation might be different, so always check with your tax advisor. If you found this helpful, hit the like button so we're going to make more videos like this. And for more tax smart business tips, sign up to be notified of our free weekly YouTube tips. The link is in the description below. I'll see you next time.